Business groups are pressing the Bank of Jamaica BOJ to cut interest rates this week and to reduce the expected economic decline from the impact of Hurricane Beryl. Economist Keenan Falconer joins us to share his analysis of the situation. Oh, but by the way, they benefit from it, right? Because the rates are going to be cut, yeah?
Yeah.
Hey, Keenan,
Yeah, I never know what you're doing, Gareth.
Glad to have you with us this morning. For the common man who's watching right now, like, who does this interest rate cut benefit?
Oh, well, cutting interest rates is really supposed to benefit everybody, both businesses and the consumer. But it's not expected that it will benefit persons immediately. So what you have is called the monetary transmission mechanism. When that headline rate from the Bank of Jamaica is decreased, it takes a while to filter through and translate to the rest of the economy. Right. In the long term, the medium to long term, which is at least a year and beyond, we would expect to see rates starting to decline on things like mortgages, auto loans, other personal loans, business loans, consumer loans that had been trending up for the last 3 years because we have been living in a very tight monetary environment. Interest rates are determined by the demand and supply of capital, and they equilibrate at the rate that we see out there. So over those 3 years, it became harder to now acquire capital, and there's a lot of pent-up demand. With that very small rate cut, it signals to the rest of the market that we're heading in this direction now, where we're freeing up more liquidity, where we want to put more money back in the hands of the consumer.
You kind of touched on it just now, but how is an interest rate calculated?
Yeah, so it's just based on the supply of money that's out there. When the supply of money is controlled, then that essentially determines what the interest rates will be. So the central bank will determine what supply of money needs to be out there, and then the rate is determined by that.
A number of businesses been saying over these past 3 years that interest rates should be cut. How come BOJ didn't? I mean, you can't think for them, obviously, but how come they never agree with everybody, and why all of us one, bam, interest rate cut?
Well, I think because the societal imperative would have been to keep inflation as low as possible, right? Because in the aftermath of COVID, inflation started to trend up because of supply chain, logistics, and other bottlenecks and so on. But now it has been anchored safely within the range of 4 to 6% right. For the last, since the year started. So for the last 6 months, thereabout. And so they have decided now that in balancing these interests, we have now managed to keep inflation under control. We have lived in a tight monetary space for the last couple of months. We can start to ease up a little bit. So it's not just the fact that interest rates are decreasing. Other measures to relax liquidity requirements have also been taken by the bank.
Yeah, Garth already asked the question about who it benefits. What about the average Joe like me? I notice anything in my life different because interest rate drop?
Well, you won't see it immediately,
and where would I see it if I'm going to see it?
If you see it, you're going to see it in your mortgage rates. You're going to see it in your auto loan rates, other businesses, business loans, personal loans, consumer loans that you might borrow. Any form of credit that you see that you borrow to take a loan are now going to see this as a signal that rates will start to go down, right? So any loans that you have to take in the long term, though, because as I said, the filtering mechanism is not as efficient as we would want it to be. In Jamaica, when things go up, they go up immediately. When they go down, it takes a while for you to actually see the effect.
Yeah. So the interest rate moved from 7 basis points to 6.75. So you're talking about basically just 0.25%. What type of impact does that have? Is it that significant?
It's not significant, but it is meant to just signal to the rest of the market that we are heading in this direction.
So can we expect then further cuts, say, over the next, 6 to 9 months?
I would expect so, because the norm prior to COVID, when we now had to raise interest rates, was that we wanted to keep a very accommodating monetary environment. And as a result, of the exogenous shock because of COVID and having to raise interest rate, that is a one-off. It's expected to be a one-off. Right. We want to trend back down to keeping the monetary environment accommodating. And there's a lot of demand. Persons want to expand businesses. Persons want to, they want to increase business activity and they need to borrow in order to do that. So when you hear that interest rates start to go down, then businesses naturally are going to be very happy about that.
Yeah.
And eventually, you want to see that business activity increases, so it's supposed to stimulate the economy, because right now growth is decelerating.
Right.
We're still growing, but it's slowing down, and we want to be able to maintain growth and also try to re-accelerate it.
Let's try and demonstrate. I'm going to invite you to demonstrate the relationship between inflation and interest rate setting. So obviously, the BOJ has declared for some time now that it plans to manage inflation in that 4 to 6% range, but then the interest rate has been at 7%. So what's the relationship between the two? So how do they, for example, take a look at, you mentioned exogenous shocks, we talk about COVID, we talk about natural disasters, burial, etc. How does that relationship between inflation and what the BOJ is looking at determine interest rate?
So they share a parallel relationship. So whenever inflation goes up, you tend to now raise interest rates in order to bring it back down. Inflation goes up because there's a lot of liquidity, meaning there's a lot of money around the place that there's more money out there and can't find a home, right? So, raise interest rates to now remove that excess liquidity, and in the hopes that your inflation will start to trend back downwards, and vice versa. When inflation rates are low, then you don't really need to worry about having to raise interest rates. You can keep interest rates as low as possible. And that was the situation that we had persisting for about a long time, right? From 2019 go straight up until COVID. We had been, the last time that there was actually a rate cut was 2019. That's 5 years now.
Oh, yeah.
You already said that mortgage rates and stuff, it will be impacted. Is that compulsory? Is this an order from BOJ to the banks and the lending institutions that high cut interest rate, you have to do it too, or no?
No, it's definitely not. We operate in a free market, and even though it is a signal, because it's the headline rate, right? So you should follow suit.
But they don't necessarily have to.
They don't necessarily have to, and they don't do it to the same degree or the same magnitude. It was the same issue now when the interest rates started going up. Interest rates on loans went up, which meant that the financial companies and the banks would have made more from loans, but they did not correspondingly do it for deposits. And so the consumer didn't get any more benefit from.
So having said that, it is not necessarily so that if I go borrow some money now, the interest rate might be as high as it was before.
There's really no guarantee. You act on the basis more of moral suasion that the banks ought to follow suit, but also in a competitive market, you can switch from one to the other. If the other person undercuts everybody else and they end up lowering theirs to a particular degree where they're getting more business, then everybody else will now start to follow.
Yeah, but what if the man is singing from the same hymn sheet?
Well, that's the basis of a very small, highly dominated market.
So then, if, for example, with this rate cut, is now a good time, for example, to start taking a look at certain types of companies that are listed on the stock market, for example, to say, hey, all right, given that this interest rate is cut, they may have now greater access to capital and will be engaging in growth activities or growth-related activities?
Yeah, I suspect that a lot of persons will be looking at the stock market, especially because it has not been performing very well for the last 4 years, thereabout. And with companies with plans for expansion and other activities now see a sort of light at the end of the tunnel, where all of that pent-up demand for cheaper capital is now going to start to be released over time.
All right, good to see you. Thanks for coming, Keenan.
Thanks so much.
Economist Keenan Falconer.
All right, coming up, we're encouraging seniors, Mr. Bell OD, to get and stay involved on this World Senior Citizens Day. So stay with us.
I don't know why you're working on this day. I should be on the beach.
Yeah.